Hey guys, I'm going to use this video again to explain the difference between market execution, buy limit and buy stops. So now, for instance, you're giving a trade. Now let me work with this. Let me say you're giving a trade. But before then, let me just explain what a market execution means. You see this line here? You see this line, this red and blue line here? This is currently where price is right now, 3341.08. But just like normal, 3341.08, right? Just like normal, market execution, just like normal, like you want to go and exchange your dollar, right? The sell price is always different from the buy price, right? Meaning you'll be buying dollar on a high price and you'll be selling it on a low price, which is exactly what is this, right? As you can see currently now, I'm selling, if I want to sell now, I'll be selling 3341.8.92 or whatever. You see that no matter how it's increasing, this one is always higher than this one because I am buying at a high price to sell at a lower price. That's just the market. So this is market execution. When you look at the entry and it's within this range, you just know that it is you just need to put a stop loss and you take profit and you put a sell, or you put stop loss and you take profit and you put a buy, right? But when is a limit order is probably when you're giving a trade like this. They say, okay, maybe buy gold at 3340, sell gold at 3342 to 3344. It means basically this is what it means. It means that you can enter the trade at 33, since they say 3344, right? You can enter the trade at 3343 and you can enter the trade at 3342. The difference is if you enter at 3344, which is the last high number, right? Your Excel will be lesser figure, right? It means that you will be having less risks, right? And then more profits. If you enter at 42, you will not be having as much profit. You will not be having, you'll be having the normal higher risks, lower profits. Do you understand? 3342 will give you higher risks, lower profits. Then 3344 will give you higher profits, lower risks, because it's close to the Excel. So now once you're giving that entry, now you know that, okay, let me just increase it because we're in 3344. Let's say you're giving sell gold at 3350 or 3353, right? If you're giving something like that, it means that if you sell gold at 3350, you'll be doing what? That will be higher risks, lower profits. But if you sell at 3353, since it's sell is up, sell is always up coming down, buy is always down coming up, right? Because you want to buy, you have to from here to buy and then sell from here to sell, right? So let me say, okay, that's figure, right? If you're selling at 3353, it means that you're selling at a lower risk, higher profit. So since that has been established, now if I want to place that trade, since it's not there yet, I can't. Is there a wait for it to get there? I just be watching as this map is moving, or I just immediately set a sell limit. I will just put my entry 3353 because that's lower risk. I'm going to put the 2 so that you'll see 3353. Stop loss is 3357, right? And then take profits is, let's just say, 42, right? So let me place. Then I'm going to still place the trade again with 3350 so that you will understand what I mean by lower risks. And when we understand that in sell, the higher the number is higher, lower risks, then higher profits. Then the lower the number means higher risks. 42, right? That's what we did. So now let me put this in my time frame so you understand, right? So you see now, when I said in sell, once it's a sell comes from up down, then buy comes from down up. So now in this sell, now since I'm giving these 2 entry, you will see why it is very advisable for you to pick the first entry or put like in between the first entry. Like if it's 50 to 53, you can just put it in 52. This is why. So you see this particular trade now, if I'm putting this 50, it means I'm mixing 10,000 naira to make 12,000 naira, right? With 3350 as my entry or for the sell limit, I'm mixing what? 10,000 naira, 10,721 naira to make 12,253 naira. But if 353 is my entry, I am mixing 6,000 naira to make 16,000 naira, right? It means that the higher the entry on the sell, the Higher the entry means lower risks, higher profits. Lower entry means on sell, anything sell. Lower entry means lower entry means higher risks, lower profit. As you can see, lower risks, higher profits. Lower entry, higher risks, lower profits. Then now let me explain buy limit. Okay, in buy now, since sell, we say we're coming from the up down for sell. The buy, we're going from down up to sell. So now let me give an entry. For instance, now you're telling they told you to enter 3342, right? Buy gold at 3342. It means that you just come here and you want to click on your trade. You just say, okay, it's 3342. So you know that it is not a buy limit, it is a market execution. Because why? It is within that range, it is within the range the limit was, the trade was given, right? It is a market execution. But if you're not asked to buy gold at 3332 to 3338, right, and then we're currently on 3343, means that it is not close to the market execution. It's either you wait for it or you just set your limit order. So you click on it and you click on buy, right? Buy limit. So we'll say 3332, right? 3332 3330 to 3333. All right, let's start. 3330. Let's say our stop loss is 28 and our take profit is, let's say 40. All right, 3330 to 3333. So let's enter 3333. 3333 now, right? Stop loss is what? 22 and our take profit is 40. Let's see if it's the same. Okay, sorry, our stop loss here is 28. Sorry, so I'm just gonna click on this arrow to change it. Our stop loss is 28. I want it to be the same stop loss, right? So now remember I said in sell order, right? The higher the number, the lower the risks, the higher the profits. The lower the number, the higher the risks, the lower the profits. So in buy limits now, it's telling you that the lower the number in buy, because sell is coming from up down, right? And buy is going from down up. In buy now, the lower the number, the lower the number, the lower the risk, the higher the profit. The higher the number, the higher the number, the higher the risk, the lower the profit in buy. Once you hear buy, the lower the number, the lower the risk, and the higher the profit, because it's going from down up. So it simply means now, from this one now, we can see that the lower number here is 3330, the higher number here is 3331, right? So in the same, we're using the same XA and the same TP. Let's see. All right, I want to be sure. Okay, yeah, now everything is the same entry now. Using the lower using the oh god, what did I do? Sorry. Sorry, 3330 to 3330 and the same. Yeah. So the lower the number now is 3330 and then the higher number is 3333. You can see now, if I'm using 3328 as my wick, the same lot size, you will see that I am mixing $3,000 naira to make 15,000 naira, right? I'm mixing 200 points to make 1,000 points. Then if I enter as 3333, which is the higher number, I am mixing 7,000 naira to make 10,000 naira. So you see that in buy limits, the lower the number, the higher the what? The lower the number, the what? The higher the profit. And the higher the number, the higher number equals to higher risks, lower profit. In buy limits, higher number equals to higher risks, lower profit. Lower number equals to lower risk, higher profit. That's just for buy. And then in sell, lower number is equals to what? Lower number is equals to higher risk, lower profit. And higher number is equals to lower risk and higher profit. The reason why is because the sell comes from up down and the down comes from down up. So that's just basically it. So if you're given that range, it is advisable to enter at the last one, the one that is going to give you minimal risks. But sometimes market does not tap on that one. It can just tap on this one and start going. So it is better so if you want to enter, you enter your highest loss size. For instance, I probably want to use lot 0.02 on that trade. You take one here, you take one here, so that you're reducing your risk of you to put 0.02 on this particular trade and risk the full, probably the full 14,000 naira. You take one here, you take one here, so you splitting your risks, right? So that when it's happening here, you're splitting your risks. You're reducing your risks and you're getting more profit on it. So forex is easy. It's not that easy. It is easy and it's not that easy. It has to do with your brain. You have to be very calculative. You have to be mentally strong and mentally okay, and you have to be smart. You have to do your plus and minus, just like your business. You know that if I buy this one, I'll quick sell them. Okay, if I buy this one will tie my money down somehow. So that's just basically it. So that's for sell limit. Sell limit means it is not at the number, but you're expecting it to get to that number and pick you up and take you to profit. It's just the same thing. Anything limit order, it means it is not in the market execution. It is not in where this blue line is, but we are expecting it to take us up, to pick us up and take us what? To profit. Do you understand? It is not currently there at the number, but we're expecting it to, let me put my phone in do not disturb, so that where did they used to put that do not disturb? Okay, do not disturb, please. All right. So it means that limit order, it is not there, but we're expecting it to get to there and take us to profit. That's just basically it. Then yeah, that's for limit order. So now I've explained what market execution is, which is this current price. I've explained buy limit and a sell limit. Now let me just explain buy stop and a sell stop. What is the difference between buy stop and a sell limit? A sell limit is that you're expecting the market to get there and pick you up, right, and take you to profits. Why anything buy stop or sell stop? A stop order means that probably now this market has been buying. This market has been buying the way this market has been buying, right? I did not enter at this buy, so I missed the buy. So I'm like, okay, if this buy continues and gets to 3346, it should pick me up and continue buying. No, normally once it's up, it's supposed to be sell. Once it's up, it's supposed to be sell. Once it's down, it's buy, right? Once it's up, it's sell. Once it's down, it's buy. But a buy stop, it's just what it's like me saying, okay, since I missed this entry, but if this market gets to here, the buy will be very, very strong to pick me up. So let's just say a buy stop now, since it's already here. Let me say I want to put a buy stop at 3348, right? Normally, if I want to put 3348, it should be a sell limit, right? But because I don't want to sell, I want to continue the buy. It is a buy stop. Buy stop is a continuation of buy. So once I click on my buy stop, I can put 3348 and it will place. So what I'm just giving order to this Meta 5 to is that once you are buying and you get to 3348, pick me up and continue taking me to the buy. Do you understand? And that's how sell stop is. Sell stop is now like, okay, now it is selling. Once you get to 3337, it should pick you up and take you to 3347. Okay, I cannot place 3340. Okay, 3340. Yeah, I cannot place 47 because a sell stop is when it gets to here, pick me up and take me to continuous sell. So sell stop and a buy stop is a continuous buy, and here you get a continuous buy. That's a sell. A stop order. Stop order is a continuous buy, meaning the market is already buying, but you want to enter in on the buy, but you don't want to enter market execution because you're not sure of your risks. So you're like, okay, once you get to here, I'll enter the trade and it will continue buy. your sell stop is okay, it's selling. When it gets to here, I will enter the trade and it continue selling, then I'll not make here. Sure, you understand? So basically what you have to do is just be very, very vigilant as a copy trader. As the beginning, as a copy trader, you have to be very vigilant about the signals that was posted. Make sure you try and understand the signal before taking it. So if it is a buy limit, you check if it's a buy limit. You don't just take order, you understand it so that you know your risks in that particular order. Do you understand? Because in as much as we try as much as possible to predict the market, we are not 100%. We are not 100%, but we try as much as possible to end every single day with profits, right? We are trying our best to make sure that people are making money, and you've seen it. But that does not mean you should not plan your risks, because if you don't plan your risks, if you don't know how to enter the market and you start trading live accounts and you enter the market playlishly or jokingly, it's going to, let me cancel that sell stop first, because it's getting close to that sell stop and I'm not ready to take any risks again. So if you don't enter the market with precision and plan, it is going to take off your money. And then when you take off your money, once a recovery trade is being placed, you don't have any money to recover. That everybody will recover except you. So it is very important for you, in as much as we're trying our best to make sure that we're giving you profitable signals, that you plan your risk, so that even if that signals fail through, the next recovery signal that is going to recover everybody's profit, you will still have capital to continue. Do you guys understand it now? Thank you.